Brent Murri. I'm principal at M13 Ventures. We're an early stage, consumer-focused investment firm located in Los Angeles and New York, investing in the future of consumer behavior. So we invest mostly in four verticals: fintech, commerce, health, and the future of work. And important for this conversation, one of the board members of Doorvest, and we invested in Doorvest starting basically about 12 months ago. And me particularly, I invest in two of those areas. So I sort of own commerce and fintech at the firm. And specifically in fintech, what I look for is the combination of property technology, sometimes referred to as prop tech, and fintech. In other words, allowing people that usually do not have access to the asset class, the ability to get exposure to those sort of investments. And so Doorvest is a unique opportunity we found at the convergence of fintech that helps individual retail investors get exposure to prop tech, traditional residential properties to buy, own, and then rent out. This is of particular interest to me because I would have been a potential customer of Doorvest probably 6 years ago when I started my journey personally in investing in real estate. I wanted to buy a home and rent it out and generate passive income. I grew up in Washington State, and I was living in California at the time, and I traveled back to Washington State where my parents were still living, tried to find a real estate agent, tried to go see all of the houses, mostly done virtually because I was still living in California, put in a number of offers, got rejected, tried to find financing at a local bank there in Washington. That whole process took about 6 months. I probably put in 6 or 7 offers and didn't get anything, and I just gave up. It was too hard to enter the real estate asset class for me as a retail investor, and I just gave up. And then about a year ago, when I came across what Andrew was doing at Doorvest, I just got very excited because I felt that personal pain point as a customer years before, and I saw the potential for something what he was building.
I'm Andrew, co-founder and CEO of Doorvest. Doorvest makes it easy for anyone, anywhere to buy and own an investment home online with this broader mission to advance financial security for all. You can think of what we're building as effectively Amazon for investment home ownership. Starting with customers and their investment objectives, we'll source and match homes based on the criteria and make it really easy for them to own and generate income online. When we think back to the origin story of Doorvest, we were investing personally with our own capital, and we're fortunate to have built up a small portfolio for ourselves. And constantly, people would come to us looking for advice on how to get started. The storyline was very similar, and probably similar to Brent's story as well. I have a job, I have some savings, I've dabbled in investing, and I heard you do real estate. Can you show me how to get started? And I'm like, great. I started coming up with a 30-point checklist of steps to follow, everything from researching a market to finding an agent to writing offers and everything through the finish line. And I would hand it off to them and then send them off on their way. Well, 3 or 4 months later, we'd bump into each other again, maybe at a friend's house or at work or something. I'd be like, how'd you do? And every single time over the course of 5 or so years and 60 plus conversations, the answer was always, I'm still interested. I couldn't get started. Can I hand you this capital and you do it for me? And so at some point, the light bulb went off where there was kind of this gap between folks that had the capital and the interest in actually getting started and buying their first investment home and hopefully building out their nest egg in an investment portfolio. And so that story is to say, this problem is deeply personal and something that we experience firsthand time and time again. And I think that insight and understanding of the consumer uniquely positions us to be able to solve this pain point. At a high level, we just make it easy for folks to buy and own an investment home online. Kind of how that works is We'll start with the consumer and their investment objectives. So you could think of how much did they have allocated towards real estate or as a down payment? What sort of returns were they hoping for? And what's their general risk profile? From there, we'll ask for a deposit from the customer. And then on the other side, we'll source and match homes based on customer criteria. So our team will go out into the market. We'll scour listings and wholesalers and whatnot to find homes that we believe meets customer criteria. We'll bring it back, match it with a consumer, and then ask for their feedback. If they say no, that's fine. We'll ask for the feedback as to why, and then we'll move on from that home, and then that'll help us refine the model. We'll keep going until we get a consumer that says thumbs up, yes, and signs a contract for the home. From there, we'll buy a home on their behalf. We'll perform renovation upgrades if needed, and then we'll lease it out. The consumer gets a finished investment home that's effectively bulletproofed and income generating from day one. They'll buy it from us, and then as they close and take full title, we'll operate it kind of end to end, vertically integrated. And then where we position ourselves is hopefully we could get a customer and help them buy their first ever investment home. 70% of our customers are first time homeowners, and then position ourselves where once they're ready for their next investment home, we're close and we're a trusted partner for them to continue to build out their portfolio with us.
Specifically in prop tech or real estate investing, you really need people that have experienced that pain point themselves. It is one where it's an industry where you need to intimately understand the customer pain point. And what we found in Andrew and his co-founder Justin early on were two founders that had spent years personally investing in the space themselves. They had a number of homes in their personal portfolio. They had gone through the pain points themselves. They understood what it would take to build a business for the customer in this category. And so I think first and foremost, we like to find founders with real world experience in the sectors that they're building in. And probably the most important sector of them all is real estate, just given all the complexities in that market and the pain points for consumers right now. So I think those were the main things that stood out to us about Andrew and Justin and probably what eventually led us to investing in the company. With Doorvest specifically, I mean, listen, generally in venture, if you find a really talented team attacking a really large market where the current product or way of doing things is broken, you're going to have success over the long run focusing on that strategy. And that's very generalized, and we'll get into specifics of why, but in that framework, Doorvest fits perfectly. We talked about Justin and Andrew and their experience in this category. Then what got us excited is the more we dug into, oftentimes investors refer to something called the TAM, the total addressable market, or if everything goes right, what is the total revenue potential in this entire market? And the figures around residential real estate and specifically single family rental properties in the United States was, the numbers are pretty staggering. You have anywhere between 5 and 7 million homes being sold every single year. That equates to roughly $400 billion in total home sales. We think Doorvest, what categorizes as a home that Doorvest customers would want to purchase, that are optimized for rental properties, it's about a fifth to a quarter of those. So we're talking about upwards of a quarter of that $400 billion market. Us as investors, we don't come across $100 billion plus markets very often. And so when we do, we get excited about the products being built in that specific market. And so it starts with a talented team building in a massive market. Those two boxes were checked when we started to dig into what Doorvest was doing. And then it's no wonder why it's such a big category, because again, some of the statistics around single family rental, specifically when you talk about real estate, are equally attractive. You have, looking back over the past 3 or 4 decades, pretty much every single year you're returning around 8% of capital on your investment, which doesn't really fluctuate, with exception to the housing crisis a couple decades ago. It's a pretty stable return. So folks like myself or any other consumer out there likes to go to that asset class because it's stable. You have very, very high occupancy rates, specifically when you talk about single family rental properties as compared to multifamily or apartment buildings, right? They're always filled out. People want to rent those types of homes. They pay on time. They have higher rent prices. And so again, it's a very good asset class for investors. And the more we learned about that category, the more excited we got about Andrew's specific solution for those customers. And so it just lowers the barrier of entry to a lot of folks like myself 6 years ago, or other people that are looking to get exposure to that asset class, because it significantly reduces the amount of time, the capital needed to buy a home in the United States, which for the majority of our generation, millennials, Gen Z, they've been locked out of that asset class. How many headlines do we read that point to millennials can't own homes anymore? Well, with Doorvest they can, and we love that democratization of the asset class that Doorvest was providing. And it's no wonder customer demand for their product just continues to grow every single month, because more people are hearing about them, understanding what they do, and wanting to buy a home through the Doorvest platform. And the last thing that really put us over the edge was we're looking for little signals in the market that help us understand what's a truly special investment. And when it came to Doorvest, before we even started talking to them, their existing investor had done what we call preempting the round. They had, before Doorvest was ready to go out and raise another round of capital, their existing investor said, don't go out to anybody else. We want to put more money in ourselves. And so for us, we saw that as a very good signal that the people closest to that business were willing to put more money in. And in fact, they were almost afraid for them to go out to market because they wanted to, invest themselves and increase their ownership. And in a way, we just did that ourselves as well. M13 in this round, before Doorvest was going out, we wanted to put more money in because we've just seen the level of execution that this team had done. And so those were some of the signals, along with the founding team and the market opportunity, that just got us super excited and continue to make us excited about this investment. When Andrew explained the business model, you could see that there are a lot of moving parts to this business. They have to go find homes to acquire. They then set up the contract with the customer. They renovate it. They sell it back to the customer. They then find a tenant. They manage it on an ongoing basis. And then they do that in multiple markets as they spread across the country. And so while it is an incredibly huge value add for their customer base internally at Doorvest, there's a lot of people working through those different departments. I've been thoroughly impressed with their departmentalizing of different functions at Doorvest, and each function, whether it's home acquisitions, renovations, they each have a head, and that head of the group has many years experience doing just that specific thing. And so I think the biggest risk to this business has always been doing too many things at once. And that was a big consideration when we made the investment. We got a lot of comfort as we talked with not only Andrew, but those different group heads, with management team. We felt that they knew exactly what they were doing because they had done it for a number of years. And so I think that was the core risk to us, was just so many moving parts. It will remain a risk going forward, but I think as you hire effectively and the team members contribute, that risk is mitigated over time.
Definitely see the same risk that Brent kind of outlined there. Like on one end, we have, and historically have always had, really strong customer demand, actually far exceeding my expectations kind of getting into the business as well. On the other end, on the supply side, there's a lot of sort of investment grade single family homes on the market that are attractive to our customers. And so what happens in between is kind of the operational pieces that Brent outlined earlier, which is kind of the complex supply chain. The general piece that we think about is like, on one end, how do we bring on experience from folks that paved and pioneered the way before us. So we have team members that bring years of experience from Invitation Homes and from Open Door and OfferPad and some of these companies that are larger and much further along than we are. And then once you kind of put them in the context of Doorvest, how do we continue to have a quick iteration cycle? So we put a playbook to market. We see how it works. Some things work, some things don't. And then we take the pieces that work, we remove the pieces that don't, and then we continue to build on top of that. And with that, I mean, we've scaled in the last year from being in only one market, which was Houston, our first operating market, where we operated and refined the model for about 2 years, to 6 active markets. So in Q4 of last year, we opened up Dallas, then came San Antonio and Atlanta, and most recently Oklahoma City and Columbus, Ohio. And so what that's proven to me is that our playbook is scaling, and we're able to tackle supply and real estate, not only in one city and not only in one state, but across many different cities and states with different profiles.
Actually, piggybacking on what Andrew just said, market expansion, I think for the customer base, it doesn't matter where you are. You can be in Minnesota or Texas or California. You can still buy a rental property through the Doorvest platform. But today you have a handful, call it less than 10 markets that you can choose from. You can buy a home in Texas, or you can buy a home in Atlanta, or you can buy a home in a select number of states. I think giving customers that option to choose from of many different types of rental properties, because even inside of single family rental, that asset class, there's a lot of different variables that you can pick and choose as an investor, whether you want high yield or high cash flow. There's different financial instruments that fit each and every investment type. And so I think what gets me excited is their expansion across the country throughout the rest of this year and into next. That's one thing. The other thing that I've just been so impressed by even over the last 3 or 4 months is the level of customer demand. We look at the leading indicator for this business is how many people are signing up for Doorvest and putting down a deposit to buy a home. And even over the last 3 or 4 months, where if you're familiar with real estate, you know what's happening with mortgage rates. They're steadily increasing. And part of our initial concern was, what will that do for customers looking to get into this asset class? It's had not as much of an effect in a good way as I would have thought. Every single month over the last 6 months, demand has increased from our investor base. It's growing steadily each and every month. And I think that just goes to show how desirable investing and owning a single family rental home actually is, right? I was talking earlier before about just our generation has been locked out of it for so many years. We can't buy a home. Through Doorvest, you can. And the barriers to entry are significantly lower. I think a lot of customers of the Doorvest platform are seeing that, and they're continuing to put down deposits every single month, even though mortgage rates are climbing. And part of that reason is inflation. If you know real estate, you know that it's a hedge against inflation. And as inflation continues to go out of control in this country, a lot of people are coming to Doorvest to find a stable asset class that continues to rise every single month, where you get cash flows. And historically, they've been locked out of that and unable to break that barrier to own a home. So a lot of those fundamentals and dynamics about this huge market that I was just talking about, $100 billion plus, that's what gets me excited. Every single month, more customers are flocking to it, more people are finding out about it, and it's allowing us as a company to expand our footprint and do it more for more people. So I just get really excited about the business.
To echo a lot of what Brent mentioned earlier as well. I mean, look, if we zoom way out, ultimately what Doorvest is looking to build is a new platform for wealth management. Historically, real estate has been the largest portion of American net worth, whereas as Brent mentioned earlier, so many Americans are locked out of this asset class. And so starting with making investment home ownership, how do we continue to build in sort of a financial services lens is kind of what gets me excited. In the short term, like our business we're in a position to be able to help so many people continue to build financial resilience in spite of sort of market turbulence and economic turbulence. And I think that's kind of what gets me really excited in the short term. And then as we deliver on that, that'll unlock our ability to build more financial products to accelerate people towards financial security. And so some things that are on the horizon are, how do we get closer to a consumer and their mortgage experience? How do we support with title and escrow or insurance and things of that nature? And then ultimately, how do we build products to be able to accelerate one's ability to buy and accumulate a portfolio with Doorvest? These are one of the many things that get me excited and pumped to work on this really challenging but rewarding platform.
When you're investing in early stage companies, there is risk to that, right? And we all know that. And that's why we've chosen this line of work. Me as a venture investor, I also angel invest on my own, and platforms like WeFunder, people are investing in early stage businesses. But the reason they do that is because the upside is pretty huge for a lot of these companies. And I'm not just saying this because we're on this call, but when it comes to Doorvest specifically, that market size or the upside is in the top 10% of companies that I generally look at. And so when I think of the risk reward profile of something like this, it has risk. It's an early stage investment, but you have to make the decision if the reward justifies that risk. For us, it was, and so we led the round, and we're now leading this new round. But I think that's the advice that I would give, is making sure that you truly buy into that upside potential of what these guys can continue to build.
Similar to kind of what Brent mentioned earlier, there's of course a lot of risk to any early stage company, and there is, if it pays off, a really massive upside on that. And then everything in between as well. Like, are you backing a company that you could, one, see yourself being a customer of, or can you see sort of friends and folks close to you being a customer of? And is this a product that you truly believe in? And if that's the case, then I think you might have your own answer.
I might just add on one thing that Andrew said that I totally forgot about this piece, but when we were initially looking at the business, so I think it's helpful in my seat as well. I see a lot of early stage. Again, we do a lot of consumer stuff. And so we look at marketplaces, we look at apps, we look at consumer offerings that sometimes have tens, if not upwards of 100 million downloads and customers. And those are the successful ones, obviously. But a lot of these consumer products, just given the price point of what they're priced at, you need tens of millions of customers to be a big business, right? To be a Snapchat or a Meta or similar type of large scale consumer business, you need millions, if not tens of millions of customers, which is hard, right? It's hard to get that many customers. What we liked about Doorvest was, even to be a multi-billion-dollar type of outcome and company, they need thousands of customers, not even tens of thousands. They need thousands of customers that we already know. Over 1 million homes in this type of market in residential real estate are transacted just for rental properties every single year. they need to capture thousands of customers. And so the hurdle to do that is much, much lower with this business. And that's just why we fell in love with some of the dynamics is, as a consumer investor, I'm used to seeing, man, you need a lot of people signing up for this. And with Doorvest, it's the opposite. They're doing a very mission critical job for an investor base where you just don't need a ton of customers to be a good outcome.
I know we covered a lot, and I'm sure there's other questions on potentially on people's minds. So definitely feel free to shoot me an email at andrew@doorvest.com, and then happy to try to comment on that.